Hello, everybody. It's Tyler and Socrates, Twiddledee and Twiddledum, Abbott and Costello, the long and the short of it. And we are going to do our thing under exceptional circumstances today. A lot of the things we've been saying, short term, intermediate term, long term, are beginning to happen. Um, and we don't have answers, but we've got a lot of observations having to do with the trading pairs between altcoins and Bitcoin and what that means. I listened to a lot of the testimony by David Marcus in front of the congressional committees today on Libra, but more importantly on Bitcoin and cryptos in general. Very clear that all the questioners can't tell the difference between any of them. And it was fascinating testimony, but that may or may not have something to do with what we saw in terms of a sell-off today. There was some big news about Tether being mistakenly printed in very large numbers and then retracted, all sorts of things. But this is going to be a very interesting show for me to get into the weeds here a little bit, the way we've been doing every day up to this point. And now that we're seeing things break the way we suspected they might, the big question is how far, how long, what does it all mean? And so I'm really looking forward to today to examine this with you. Socrates, how's everything going for you? I know, have been putting a lot of trades on the short side, a lot of pair trades on the short side. You must be in heaven today.
How's it going, Tyler? Yes, I'm certainly a very happy camper today. I was very excited about the price action because of the positions that I have been taking out over the last couple weeks. I have been selling a lot of spot Bitcoin up around the 11,000 area. I mentioned how I sold significantly more than I really wanted to because of my confidence level and the how basically uncomfortable I felt being long up there with that huge shooting star candle on the weekly, and then the developing Wyckoff distribution pattern were making me really want to go ahead and sell my spot more aggressively than normal, and also look at shorting some altcoins. And for those that have been following along, I did have lined out where I was looking at shorting ETH BTC, took out a pretty good position there, average cost basis around 0.025. That's moved in my favor very nicely over the last about 48 hours or so, and was also got into a short in LTC, and am very happy that that has just been really breaking down as well. So from my Bitcoin maximalist point of view, I'm really, really happy to see the alts crumbling and falling through some major areas of support, which they were at a very do or die zone where they were ready for a very big move one way or the other, as far as I could tell. And instead of going up like most people were expecting from support, it appears as though they have broken down, and that is very, very a very good sign from my perspective in regards to the Bitcoin price action and market cap moving forward. That leads us into a much healthier environment, and is very exciting in terms of the potential upside that Bitcoin would have without having to drag up all the alts. So feeling like a happy camper due to the positions moving in my favor, but also because of the macro implications that could be occurring just because of what we've seen over these last couple days with some large cap alts.
Terrific. Yeah, I couldn't agree with you more. It's great when trades go in your favor, but it's a lot greater when they help to emphasize the fundamentals that so many of the maximalists and the Bitcoin standard bearers have been talking about. It's a very small crowd. You know, there are very few people that have taken that stance within the crypto space, and everyone outside the crypto space has no clue what we're talking about, including senators and congressmen and regulators. It's very nuanced, and until you get that mental picture of how different Bitcoin really is from everything else, you shouldn't be lumping everything together and calling it crypto. But there are a dozen, maybe a couple hundred out of the thousands, maybe hundreds of thousands in the space that have that belief that is so strong. It's nice to finally see things happening that give very strong evidence to the fundamental analysis that goes into that conclusion. And it's far too early to do a happy dance. And we'll talk about that today because a number of things can happen in here. Fundamentally, with Libra especially, with gold especially. Gold broke down a little bit today. The stock market tried to hold on and it broke down a little bit today. We're not gonna have time to go into that sort of thing. This is all going to be about price. Bitcoin prices, absolutely, and Bitcoin prices relative to the altcoin space, and trying to make heads or tails out of where we might be going here. And so with that, I'm going to jump on and start with the long-term stuff. And
while you're pulling up the chart, I did just want to share a tweet that you reminded me of when you talked about how few people understand what is going on with the Bitcoins, and specifically as it relates to the altcoins. And Peter Schiff, who I have a lot of respect for, but really question his understanding of Bitcoin, sent out a tweet recently that really made me laugh a little bit. He says that the breakout in Bitcoin's dominance is very bearish for crypto. It looks like Bitcoin's dominance could soon rise to 80%. If you think this will happen in a Bitcoin bull market, you're crazy. And that is a very, very comical tweet, in my opinion, and really goes to show how some very, very smart economists really have no idea what is going on in the Bitcoin space, especially as it relates to the altcoins that are trying to make a name for themselves.
That's a great point, and that's something we're going to talk about today, because that's what I've always assumed. Just what Peter Schiff was saying, that Bitcoin is not going to be able to pull away in a bull market. And that's what's being tested right here, right now. We are seeing the altcoins drop away as Bitcoin was in an intermediate term bull market. The question is, which do we prefer, and which will be the best thing for Bitcoin? Going up strongly from here, which I believe is still in the cards, or dropping all the way back down and making sure that after all the altcoins are littering the road, that Bitcoin backs over their bodies over and over again with a 32-wheeler truck and make sure they're never going to rise again. So we're looking at a chart now, which is the daily chart of Bitcoin. Do you see that?
Yep.
Okay, great. This is the one I've been using for a long time, and I keep talking about these two green parallel lines at about 11,100 and 10,100. And getting above it, we were able to stay above it for a number of days, but we kept dipping down into it. And notice all the times we come right up to the 10.1, come down to the 10.1, go up to the 11.1, finally break out above it, and then slip back down all the way to the 10.1, slip back down below the 11.1, hold above it, slip back down, stay in the middle of it, try to get away from it, back down again, and again. Well, this is the first action we have had in the bull market, basically, in which, after running all the way up to 13,800, we have come down with a big body below that 10.1 area. And we are closing tonight. If it closes anywhere in this region, also notice that this is the setup trend line. We wicked down through it today. 3 days ago, we broke the SAR on the 4, 5, and 6 candle. This is a very negative picture on the daily chart. And the question is, what comes next? Notice also that the long-term moving average on the daily is flattening out. The intermediate term crossed it today, and the short term is, of course, all the way down at the 10,000 level with the price. So it's setting itself up for something that we've been calling for, which is a drop down to the 8,500 to 7,500 level, which is my first buy zone. I do not have orders in there. I have not told consulting clients to put orders in there. And those that have understood that that's what I said before, I would be very cautious at this point, because this is setting itself up for the possibility to cut through that area and to go down to the $6,000 to $6,800 area. And we'll just have to take it a day at a time. There's no reason to be anxious to buy. I've got clients that are still about a third of X in. Most clients are 10X in. I do not want to get out of those positions because on the longer time frames, this is the daily, I'll go to the weekly. On the longer time frames, we've got the long-term moving average all the way up at 6,200 and moving up sharply. It is in no danger. The intermediate term moving average has been broken with this week's candle, but we've got a long way to go in this week. We could easily bounce off this line, which is the one that I have been describing on the monthly as holding this entire move up, but I'm keeping it on the weekly chart, because if we break below that, then things can begin to happen. And that is where I'm thinking the 75 to 8,500, which is the old phase 2 line of the old hyperwave, comes into play before we drop down to this final area in the low sixes. Now, because I am saying that I don't want to sell any positions I have, I want to add to them as we come down. Don't mistake that to mean that I am certain that we can hold the 6,000 level. We're sitting around 9,600 right now. And we have a top in on an intermediate term move. There is a lot of evidence we still have to see to tell how far this drop is going to go. And that's why I'm going to turn a lot of this over to Socrates to look at the shorter time frames. But before we do that, I want to also pull up the thing that convinced me more than anything else of how powerful this intermediate term bull market was, which is the monthly. Now, on the monthly, I have drawn this line that we just looked at on the weekly, that above which, if I were to extend this even lower, that doesn't really take in any price action, something like that, has described 1, 2, 3, 4, 5 months of action. And notice what's happening here on this week's candle. We are now sitting right at this red line. If we close below this red line on a monthly basis, even though we're only on a 4 and a 5 on the sequential green, I think that will be a very important move. Now, you're not going to flip this price, no matter where this thing goes, because of this giant 3 candle that's only 2 candles back. And the third candle back is all the way down at 4,300. So we can go down quite a bit on the monthly basis. Notice also that we have taken out the monthly SAR. And that is an important first posting, along with the one that will be posted this week, that the downtrend has finally been broken on the long-term monthly basis, along with the turning up of the long-term Copic. This is not going to go down because of a $1 or $2 or $3 or $5,000 drop in Bitcoin. It takes a long time, a full bear market, to get us down here, and you can see we've just begun to turn up from it. So there's a lot of things going on here that we have to let play out over the weeks and months to come. And none of this has to do with the fundamentals that we do want to talk about Bitcoin versus the alts. Socrates has come up with these great charts that show that for the first time in the alt-Bitcoin relationship, different things are happening than have happened before. So returning to Peter Schiff's statement, I believe he's absolutely correct for someone who understands economics and markets, is giving his best shot at interpreting this very complex relationship between Bitcoin and all the other alts. I would agree with him that if the alts are beginning to die, the quickest way for that to happen is for the Bitcoin to drop further than we would like it. I don't believe that is necessary. I've got enough proof now that even in this intermediate bull run, that Bitcoin has slapped sharply in the faces of all the altcoins what they really stand for. And we'll get into that in just a bit. But this is a very important chart to me. I also wanted to try to pull up one other chart, which I will do a little bit later, or maybe I can do it right now, just to make this story complete from my perspective. And that will be, I'm trying to remember where I put this.
What is it you're looking for?
I'm looking for the sugar chart you gave me.
Ah,
Oh, I know. Here
I
it
can
is.
pull that up if
I got it right here.
Sweet.
Okay. I know a lot of you are irritated about the fact that Bitcoin didn't drop down to 1,000. And are further irritated by the fact that we keep saying that the percentages that I use that it would drop down to 1,000 are actually statistically correct. But there's no way for you to believe that unless you have looked at 500 hyperwave charts. I'm going to show you one chart that Socrates pointed out to me and is in our book, which shows a potential for what Bitcoin is going through right now. And this happened 40 years ago. And I know things that happened 40 years ago in a commodity market has no effect on Bitcoin. Absolute nonsense. People don't change. Charts change, asset classes change, everybody gets new ideas, technology comes in. But the one thing that doesn't change is our human emotions, and that's what moves all these charts. What you're looking at are two hyperwaves. The first one in sugar back in 1972 that took prices up from $4 to $60 or 15x. And this is the one that I started learning hyperwave on as it fell all the way back down and never returned to the phase one line, and then took off and went from $6 up to $40, 7x or 8x in something that looked like a hyperwave but doesn't have all of the requirements. If you look close enough, you can get a 1 here, and you can get an accelerated 2 and a 3 and a 4. But that's not the important thing. The important thing is coming down. We did go below this if this was a phase one, but more importantly, we completed the original hyperwave by going lower than the phase one point. Now, the only reason I am showing you that, this is very, very rare. Just as it would be very, very rare for the current Bitcoin chart not to complete the hyperwave down below 1,000. What I am saying is my confidence in hyperwave is far, far greater than those of you have only applied it to one asset class, which is this one, Bitcoin. And here is the 3,000 level. We came from 20,000 down to 3,000. We stuttered step for about 5 months, 4 months, and then took off sharply again. Very similar to the chart I just showed you 40 years ago of another hyperwave that did not make it all the way down to the lows. I have consistently said that the 1,000 level is still on the table. And that's not because I am contrarian or dogmatic about something that I've spent 40 years studying. It's just that when you get this kind of an intermediate term move up, you need to keep your options open that there are two ways to conclude this hyperwave. One is to go above the top at 20,000. That's the one I'm leaning towards heavily at this point. But we have just ended an intermediate term move up. I've shown you that on the weekly chart and on the daily chart, and we are heading down now. Socrates has identified the Wyckoff distribution that we will take a look at in just a minute, because I want to see what this downside action is doing to that. And you know what that distribution calls for. It calls for something like an 80% drop out of it. So all I'm telling you is keep an open mind. We're going to go into the fundamentals of why we could go up from here if the altcoins continue to do what they're doing, which is to fade quickly. Bitcoin versus Ethereum versus Litecoin was down 12%. Litecoin to Bitcoin was down 12% today, and we'll see why that is so important. So keep an open mind. Remember all of these charts. Remember that we have been teaching that this is no different than any other asset class, meaning that technical analysis works on it as well, if not better, than almost any other asset class I've ever studied. It's just that everything is compressed so quickly and so volatilely and so powerfully that you must remain on your toes and don't eliminate any options until the technical picture gives you a clear evidence that that's what you need to do. And with that, I'm going to go off screen share and turn it over to Socrates so we can get into the detail of what we're actually seeing in these markets today.
Okie dokie. I'm pulling up my screen now. And I had the sugar chart with the hyperwave lines drawn on, so I thought I'd share real quickly. The chart ends at 1972, but that's right about when phase one was broken. And look how it goes. You got a beautiful 2, 3, 4, 5, 6. Remember, this is one of the charts that caused Tyler to discover Hyperwave. He got this action mixed up with the silver chart because they looked so similar. So definitely keep that in mind, that this is a very important chart. And I'm with Tyler in the sense that once you've seen hundreds of these charts and they all end up in the same place, it's really hard to get that out of your mind. And instead of getting that out of your mind, what your mind starts to do is think of, well, what are the most maniacal phase sevens that I've ever seen? And could we maybe compare the Bitcoin price action to another super maniacal phase 7? And this shows you why Tyler keeps saying that the hyperwave is intact until a new all-time high is created or until the price returns to phase 1. That's because he knows what can happen in between there. A lot of people get very frustrated at that and say, well, we can't just wait until new all-time highs. That's just ridiculous. Well, that really is what needs to happen before this hyperwave is invalidated. And that's why it's so important to have complementary tools such as Consensio, because just because this was still phase 7 doesn't mean that there wasn't any money to make in this huge run up in 1980 that took it from $8 all the way back up to $40. So if you were using Consensio, you could have rode that all the way up while still being suspicious that there is still a reason why this might not be able to create a new all-time high. Reason being is it never returned to phase 1. Look how close it got. Within 6%, took off into a new, basically, hyperwave fractal. We have like a 2, 3, and a 4, definitely a new bubble. Then maybe a 5, 6, 7 comes all the way down. Look how close it gets again right here in the summer and fall of 1982. Wicks off of the phase 1. And Tyler has said that even a wick down to 1,000 wouldn't count. He needs a close below. And that's what we finally got after another sort of parabolic move. Finally happened there in 1985. Not saying that this is what I expect. I am definitely viewing this as a very low percentage chance, but I'm not saying that it's a non-zero chance. We are definitely seeing some similarities. Just quickly threw on some lines here to show that we are, especially on lower time frames, kind of seeing, everybody was seeing this hyperwave fractal forming on these lower time frames, kind of hard to see on the weekly, but very, very similar to what we saw with sugar. Came pretty close, not nearly as close to phase one, takes off into a parabolic move, almost gets back to the top of phase 6, and now is breaking down. So it's definitely something to be aware of and keep in the back of your mind, even if you think it's a low percentage outcome from here. I think it is a very, very high percentage that we find support above 6,500. That, in my mind, is the most likely outcome by a long shot. And I'm going to be aggressively buying. If we basically from 85 down to 65 is where I am licking my chops at buying. And that is the most high probability outcome in my mind. And that is due to the upcoming halving with Bitcoin. And to bring it back to Peter Schiff's tweet, I fully believe that Bitcoin market cap dominance increasing is bullish for Bitcoin, and B, that Bitcoin can overtake the market cap dominance in a bull market. Reason being is that it halves and the altcoins do not. And even a layman can understand that a decreasing supply is bullish for the price action. And if the crap coin that they're holding isn't going through a halving and doesn't appear to be rallying as hard as Bitcoin is while it's going into its halving and maybe even following, then they're going to be able to understand a big part of what separates Bitcoin from everything else. And also that fear of missing out is a huge motivating factor for people in crypto. If you're holding on to a crap coin that is not going anywhere and Bitcoin is going to the moon, eventually you're going to get so afraid of missing out that you're going to start getting back into Bitcoin. And in that environment, we absolutely could see Bitcoin go all the way back up to 90-95% market cap dominance in a bull market. When it goes up, like this is just exactly what I would expect to see. When Bitcoin goes up, it out earns the altcoins and gains in the market cap dominance when it goes up. And then when it goes down, it also out earns the altcoins and gains in the market cap dominance because altcoins go down harder when it goes down. So Bitcoin up and altcoins lagging means Bitcoin increases market cap dominance in a bull market. Bitcoin corrects and altcoins correct harder, meaning Bitcoin continues to increase its market cap dominance in a bull market. Remember what happened in the bear market. Bitcoin really wasn't increasing market cap dominance. Even when it rallied, alts were rallying harder. And when it pulled back, it was just basically getting back what it had lost on these rallies. So it's just kind of this ping pong game. And the opposite is happening here, where it is earning in both cycles, on the upside and the downside. So I firmly believe that Bitcoin could overtake market cap dominance in a bull market. And I do think that that would be a very good way to basically get rid of the balls and chains and the hangers on. So definitely looking at a very similar area as Tyler. I think he's got it drawn slightly differently, but this trend line right here is very important to me. This is where I would expect some support to come in. I do think that we are about due for, at the minimum, a consolidationary period, and I would more expect a small bounce back up to about 10,200 from here off of this horizontal and trend line support. We can kind of just look at the bottom of this wick where it found support on this sell-off, and then look at how it lines up with this trend line here. At the moment, it kind of looks like this trend line might be breaking down, but there's a lot of time left to go 3.5 hours or so until the close. And that's what I'll be watching for closely. I really expect the day to close above this trend line, which is waiting around 98.20. And that would put us in a position to get a little bit of a relief rally, and would leave the support intact. So we'll be watching closely for this daily close to see if it can get back above this trend line. If it doesn't, that would definitely be a cause for concern. So we'll go ahead, and Tyler, I may have already shown this, but the parabolic SAR did just break on the weekly. It was sitting at 96.50 before it broke. So the sell signal would have been initiated at 96.50. That trade is still on the table since the price is basically slightly above that. Breaking this SAR tells you that you want to, if you're just trading the Wells Wilder parabolic SAR, it is a true stop and reverse system in the sense that you're going to be long as long as it's bullish, and then as soon as that breaks down, at that time you flip your position, which means you close your long and enter short and hold on to that short as long as the SARs are on top of the price. So that was just initiated. I'm not selling that right now myself, mainly because I am expecting some support right here from the horizontal and trend, and I do think that a bounce from here could lead to a very good selling opportunity. So we did recently have a 4-hour close, and it did come below that horizontal, but closed back kind of inside of it, which tells me that this is holding as support. Want to see the same thing with the daily and that trend line kind of wicking down below and then closing back in line with it or above it, ideally. And we'll go ahead and take a look at the moving averages, which are getting ready to give me a big signal. So as you will notice, I use a number of different things to determine my short, medium, and long-term trend, and they're designed so that they all signal around the same time. That's what I really want to see, is multiple of my indicators giving signals at the same time. So the two that are most important for me when determining a medium-term trend is the weekly parabolic SAR and the 50 and 200 EMAs on the 4-hour chart. Notice that these have been bullish. The EMAs got a golden cross back in February when the price was at about 3,560. I did buy there, but I certainly didn't hold on through this because I was really expecting a bearish continuation from about in this area. So that was a very, very, very nice buy signal, and that has remained intact. If I would have just stuck to my moving averages and negated everything else that was showing me sell signals in this area, then I would be holding on to that from 3,500 up until probably somewhere in today or tomorrow. I expect these to cross bearish, and that would be around, I would expect 9,500 to 10,000. Now let's take a look and see how that lines up with the weekly SAR. Weekly parabolic SAR gave you a buy signal at about 39.80 and just gave us the sell signal at 97.50. So those two indicators lined up pretty much precisely on the bullish entry, and now it looks like they're lining up on the profit take as well as the full-on reverse. I trade the moving averages as a basically stop and reverse system, in the sense that once they do give us a death cross, that is the sign definitely to get out of all long exposure if I haven't already, and look to go short, specifically if the price is near the moving averages as they cross over. So seeing those two indicators telling me that the medium-term trend is turning bearish, and that tells me that I really want to, like Tyler said, not be anxious about buying back or re-entering into long exposure. And I also want to be doing my best to let the position move in my favor as long as that trend is going to go. As long as the medium-term trend is pulling back, I want to continue holding on to that short exposure as long as I can. So weekly parabolic SAR says that the medium-term trend is bearish. The 4-hour 50 and 200 EMAs are getting ready to agree, but they haven't yet. So waiting for that final confirmation will be very important. And going to go ahead and zoom way in to show the call that I had just recently made before, basically this morning. And we can go over that real quickly. Let's take a look. This probably isn't exactly how I drew it this morning, but now we have more information. So I'm definitely going to use that information to my advantage to make some adjustments. And we want to make that red because this is a bear channel. And we go ahead and throw back on the 250 EMAs. So we see right here that we are at the bottom of a bear channel. The tweet that I made was a few hours ago. I said I expect support to be found above 9,300. And then I expect a small rally, which could provide a great selling opportunity, specifically if it gets back up into this area. So far, so good. It looks like we did find some support above 9,300 at the bottom of this channel, in line with this horizontal right back in here. I believe that's what I was looking at. No, it would have been this horizontal right back in here. So now what we would be looking for is a return to retest the EMAs and or the top of the bear channel. And from there, I would really be viewing this as a really low risk, high probability selling opportunity. Anywhere from 99 up to about 10,500. And after that, we would go ahead and measure a swing target, which will give us a price and a time target that would be adjusted depending on how long it takes to get up there. But let's go ahead and take a look at what this gives us. Something along these lines, like so. And this will depend how high this bounce gets and how long it takes to get there, or if that doesn't happen at all. There's a lot of variables that can change here, but as it stands, I am expecting a bounce back up to about 99, and anywhere from 99 to 10.5 looks like a very good selling opportunity. We've got horizontals, we've got trends, and then from there pulling back to about 9,000 by let's see here, that is in about 2 days, bringing back down to around 9,000. So that is what I'm looking at for the very, very short term. For the medium term, I'm going to be watching these moving averages like a hawk. If we do get this bounce, it could provide the perfect bounce up and into a death cross. And that would really add to the probabilities of selling this, is if it is occurring while a death cross is happening. So that's what I will be watching for very closely on the medium term. My most likely targets for where this thing will stop and continue a bullish move to the upside is at 7,500 and about 6,600. those are my two most likely areas that we will find support, and we will show you why. Right here, the 200 EMA is waiting. It will continue to move up, and I would expect it to be in this 75 area, which we have prior volume, prior horizontals. And then also looking at this weekly 50 EMA is currently at 67, and that will continue moving up. And the final area of support would be this sort of 6,000 to 6,700 area. If that breaks down, then I am going to very much be changing my stance. That would likely mean that I could no longer be long-term bullish. If we break down that area and fall back into the cloud, I would definitely be worried. And then absolutely, if we broke down 63, I would no longer be able to be long-term bullish. And in that case, I would not have confidence in continuing to buy the dip. Right now, I am confident in buying this dip because my long-term trend is bullish. As long as I'm long-term bullish, I want to buy when the short and medium-term trends go bearish, because that tells me we have a dip in a long-term bull market. If the long-term market changes to a bear market, now I completely change to looking to sell the bounces instead of buying the dips. So I am very confident that we will find support in the area that I need it to stay bullish. I'm going to be buying heavy. If I'm wrong, it's going to hurt, and I'm going to lose a significant amount. But the probabilities in my mind of it finding support here, and then the risk reward of how much upside there is if we do find support on this pullback and keep the long-term bull trend intact, means that I want to be buying and buying in a very significant way as it relates to my net worth. So that is everything that I've got. Anything to add there, Tyler?
No, that's great. All of your zones are lining up very nicely with mine using other techniques. And as we said yesterday, unfortunately, to a certain extent, many other analysts who I really respect are looking, first of all, for this kind of a pullback. Secondly, the extent of this pullback. The only thing that's in question is how long it's going to take. Socrates showed you that great chart of the sugar, and even after it came all the way back down off that correction, it wasn't over and went up a third time before it worked its way lower. Tone and Benzen and others believe this is going to be a longer period of consolidation than we've seen before. And just as we are seeing Litecoin and other things not doing what they should be doing in normal times, this cycle could very well be different than the first two cycles in Bitcoin. And it could last a lot longer. Phase 7 is a scary thing. We've shown you charts of General Electric in which the silly thing drops all the way down almost to the bottom, but is still in a phase 7 and then runs way the heck up, and then spends years coming back down and then runs all the way heck back up, and now it's working its way down to the final, I believe, bottom. Well, we've seen that over and over in the Japanese stock market, where 20 years we've been in a phase 7 to a certain extent. Gets a little bit difficult, but my point is that I would far prefer this thing to stop at 8,500 or 7,500 or maximum down at 6, and then begin to build and start moving up sharply without any of the altcoins with them, or very few of them, go to highs above the 13.8, and then on its way to new highs. I will be dancing on the top of my desk if we take out the 7, the old 4 high at 19,666 bit stamp, because then we are off and running. And we can get away from this hyperwave, and we can put it to bed. Don't have to think about it or worry about it anymore. Just keep in mind that this is not over at this point. We're gathering evidence at all time frames, but we're also gathering evidence in terms of all the alts, which I firmly believe are the reason we entered the bear market that we did in 2017. And maybe we're getting some evidence that that assumption was correct. But let's take a look at the Bitcoin pairs and see what it looks like on the charts, and see if you begin to agree with us.
All right. Yeah, and that just one last thing to chime in is it is, I agree with you that it's worrisome how many people are identifying the same areas of support and the same kind of buy zones. That is something that I really do not like seeing. I couldn't agree with you more that I want to be lonely in where I'm seeing support and where I'm seeing the buy zones. And that's where I have kind of come to the conclusion that it's either going to go a lot lower than everybody's expecting, or it is going to take longer to get there than everybody is expecting. So if it takes 2 months to really grind down to 7,500, that will cause a lot of people to change their perspective and start looking for lower and lower prices. That's really the most ideal situation for me, would be a long, slow grind down over the next couple months, like Willy Woo is calling for. That would allow the alts to really, really continue to crumble, and then it would also allow us, I think, to get a little bit more lonely in our buys at those levels. So that's really concerning me, is how many people are looking at the same areas. And because of that, I think that it will either just wipe out those areas, take them right out, or it will do it in such a slow, meandering way that it will cause people to abandon that as a buy zone. So that's just kind of what I've been thinking about there. Let's go ahead and pull up some of these alts. Just go ahead and start top right of the screen with Litecoin. So it is just looking absolutely terribly. I was really expecting this thing to bounce over the last maybe 5 days or so. We had a bullish bull div on the RSI. With the RSI, it had created a higher low when I made this call here, and the price had created this lower low. And this is something that I'm very used to seeing as it tests a major boundary, where it looks like it got this bounce and that's all it was going to get, and then it just melts down below it, but fails to really sell off hard like you would expect after breaking a major boundary, and instead forms some sort of buy signal with the RSI. And that is really what I was expecting here, was a significant bounce back above this 0.01 that would run into resistance at about 0.012 and eventually lead into 0.01 breaking down. And as we talk about, the longer you spend under this area of support, the more likely it is to really stay down here and not be able to get back above. And it is getting to that point now where it is definitely spending some time. And if this thing was going to bounce back above, I would have wanted it to do it before this RSI broke back down below 30. So now I'm not expecting this bounce anymore. Potentially it will get it'll get something off of 0.07, but that is the zone that I am seeing it in right now. Let me go ahead and remove that and add this. It looks like it's back stuck under this area of resistance, which would put it above this area of support at 0.075, and we'll go 0.067. So this, now that I'm no longer expecting this bounce, I am still expecting this action. This arrow was drawn using a time target and also using these horizontals as confirmation that this would be a logical next area for it to either consolidate or get another bounce. So no longer expecting this back up to 0.012, but am expecting us to go down here and retest 0.007. From there, maybe we'll get a nice bounce back up into here or so. But eventually, I would absolutely be expecting that to break down as well, which would give us the next target of 0.003. This isn't the target yet until 0.0068 breaks down, but just preemptively outlining the horizontals and where my targets would be. For now, it is 0.0076. I wouldn't expect much of a bounce. I would expect it to go ahead and get down to 0.0067. From there, maybe it'll bounce, maybe it'll consolidate, maybe it'll just break down. If that does break down, then this would be my next target. And notice how the same action happened in the huge Bitcoin bull market of 2016 and 2017. Notice how Litecoin just got dumped on for over a year. I mean, and for much longer than that, if you want to keep going back. But as Bitcoin was really rallying in 2017, look at what's happening with Litecoin. So absolutely, Bitcoin can gain back market cap dominance in a bull market. We have seen that in 2017. It gave it up in short order when the alt season came in. But we do know that this can happen. This sort of death spiral is about as bearish of an action as you can get. That's what we've seen lately out of XRP. It's what I'm expecting out of ETH. And it is basically what I would be expecting out of Litecoin. If we can break down 0.0067 at that point, we notice what happened last time when we broke down that area of support. Well, it was nothing good. So that is where you could use the bars pattern to kind of draw a fractal and see if we do break down 0.0067, the price following what it did last time would make a lot of sense to me. And that's kind of how I would illustrate that there. Again, I am getting ahead of myself. I am really excited about what we're seeing and wouldn't be able to make that call until this falls apart. But right now I am expecting us to go and retest that area. Anything there, Tyler?
No, that's all great. Thank you.
All right, take a look at Ethereum. Might as well just pull up the USD pair real quickly. We identified this as the area to sell based on breaking down this trend line. Say what you want about trend lines, but man, do they work well in crypto and especially with alts. I usually focus on Ethereum and Litecoin, but many alts will really respect trend lines. When they're moving, they'll develop a bull trend line, and then once that breaks down, it is a huge sign of a reversal. And what do I like to see as confirmation? Is this bearish cross with the 50 and the 200 EMAs, and that came in. The price didn't necessarily pull up and into it, but what do I say? I say that I want to see the price close to them. And right here, we do have price close to these EMAs forming a bearish pattern after breaking down a bull trend line and watching these come in for a bearish crossover. So everything was lining up to sell this and either to sell spot or to get short. And that has sure worked out like an absolute charm. Went from the 270 area all the way down to 200 in very short order. And that's what you expect when major boundaries get broken in crypto. Moves happen in very short order. And I would from here expect a bounce off of 200 or so. Notice how this is that same kind of action. Come down, get this bounce, and now fall back. I'm thinking that we should be starting to see a divergence in the RSI potentially. We are not. That is very interesting. It is pulled all the way back down and is not created a divergence. So here what I will generally do is try to identify the next trend lines that are going to be important for this price action. And we just do that by essentially connecting highs and lows. And something like this is what I will be looking at. That is a very steep angle down. So I wouldn't be too certain that it will be able to continue in this trajectory, moving so hard. I mean, this thing moved from 315 all the way down to 200 in very short time. So maintaining this channel isn't all that likely to me, but if it does, then holy cow, then that short will be very, very happy. That's for sure. So if this does break to the upside, then the next bull trend line I would be bear trend line I would be looking at would come from connecting this high on June 26th to the high, the high, yes, that was right, June 26th to the high on July 9th. That would be the next trend line I would be looking at. And trend lines, like I say, are extremely important for altcoins. So let's go ahead and take a look at what we're seeing from ETH BTC. It has closed below this major area of support, this close on Sunday. This is when I started really getting excited about Bitcoin leaving alts behind, was due to this close. We have been consolidating above 0.025 for over a year. It had been looking like very strong support, but also potentially seeing some descending triangles and some bearish patterns that made us think that the horizontal support would eventually break down. This weekly close told me, yep, it did. And now that to me does not look like a fake out at all. A fake out should have some sort of wick, a good response towards the close. This close basically at the bottom of the week's range and below the area of support. Very strong evidence that that support is broken down. And if that is the case, where would our next target be? And that's where things get very fun. We would be looking at about 0.008 due to having broken down this area of support. So now this is the zone that I believe we are in with resistance up here and support down here. And notice how you could be looking at this and thinking, man, I sure missed out on this move. This is a huge move. This has to be getting exhausted. Look how it's lost almost 90% of its value, 80% plus of its value from up in here. This thing has got to be ready to turn back to the upside. Not according to the ADX. The ADX is saying that this trend is just starting, that we have been just entering into a trend as of essentially these last couple candles. This crossed through 20 and has the negative DI above the plus DI, and those are starting to diverge. So this says that we are only at the beginning stages of a bear trend, and that there is a lot of room to go. notice that we did get a death cross with the 50 and 200 week EMAs for the first time ever on Ethereum Bitcoin, telling me that, yep, long-term bullish, bearish trend. Take a look at the Ichimoku cloud. It has been telling us that this thing's been in a long-term bearish trend since July 16th at about 0.062. So this thing has been working very well and has shown, notice how we get this C clamp right in here, and that showed that the price was going to have to get some sort of counter trend correction, some reversion to the mean to resolve that. That's exactly what happened, and got another sell signal right here with the bearish TK cross. So basically, everything is saying that this is in a long-term, short-term, and medium-term bear trend, and that it is at the very early stages. And I want to be betting in things where all the trends are in the same direction and it's not close to being exhausted according to the average directional index and some of the other indicators that I use. So for me, Bitcoin, I don't really want to be messing around. I want to be waiting to see what happens. I don't want to be anxious in buying back. I want to be very patient and just waiting for everything to line up there, which is kind of what we see here. Everything lining up with the long-term trend is bearish, according to the Ichimoku cloud, according to the EMA crossovers, and it's very early on in the bearish trend, according to the average directional index. Let's take a look at the weekly SAR. That says, yep, we are in a medium-term bear trend. Let's take a look at the EMAs. They say on the 4-hour chart, they say, yes, they agree with the parabolic SAR that this is a medium-term bearish trend. Both provided tremendous sell signals up in here around the 0.03 area, and continue to get stronger and stronger as price moves down and these diverge. So we confirm that the long-term trend is bearish, the medium-term trend is bearish, and then we can go ahead and zoom on in and see that basically every time frame shows these bearish moving averages. And that tells me that bounces are going to be great selling opportunities. So like I said, I'm just going to stay away from Bitcoin until it shows me some really good signals or gets to an area where I'm very interested in buying. Not going to be impatient. And in the meantime, I'm going to be focusing on this pair where everything is lining up, and I'm going to be looking for these bounces to add to my position. I already do have a large position. I want to continue adding because I think that this is a really, really good setup. So right here, we notice that it broke through this bear trend line. Just looking on the 15-minute chart, and is starting to bounce. And this is one where I'm going to be probably looking to add and looking at about 0.022, seeing how far this thing can bounce. And I think this will be one of those bounces that will provide a great opportunity to go ahead and add to the position. So everything I'm seeing here looks good from the bearish perspective. And I am very happy about the progression that we've seen with that last week's close. And now that we are getting a bounce, I'm going to have my finger on the trigger ready to sell. Notice how last time we tested the 200 EMA on the 30-minute chart, it provided basically perfect selling opportunities. And that's what I would be looking at all the way down, is bouncing up to those bearish moving averages and looking to go ahead and add if we are able to get there. And if not, then oh well, I'll be happy, because that means the position is moving in my favor. And that's what I got for that.
That's really great stuff. And we've gone over an hour. I think we covered everything we wanted to, other than getting into some of the fundamentals that we're beginning to see, not only with Bitcoin versus cryptos, but cryptos versus the regulators, crypto versus corporations like Facebook trying to preclude it by coming up with their own constructions, which may or may not include Bitcoin. I think if they're going to be able to actually come up with a basket that would work for the central banks around the world to give up partial control, and the IMF and the World Bank and the politicians and the finance ministers, they need to put together a basket that they can all accept, which would, in my mind, be made up of a half a dozen very strong currencies, similar to the DXY, which is made up of just a small number that is a great way of balancing out what the dollar is worth by having percentages of yen and euros and other things in there. But this time around, this is far, far bigger than anything any of these people have seen or read about before. There are no history books or economic books. There aren't even things in Austrian economics or Keynesian economics or monetarism that can be inclusive in all of the things we are seeing because of the world debt problem. And so when someone like a Libra comes along with something that actually makes a lot of sense, even though Congress is saying, yeah, but look who's telling the story. It's somebody that we can't trust. It's somebody that over and over again has lied to the American people about privacy, lied to the government about what they are doing and are not doing. And that came out very clearly today in the testimony. I felt sorry for the speaker for Facebook in the Libra project, because all he was really doing is hearing everybody talk about all of the sins of Facebook in the past instead of having any kind of intelligent discussion about what Libra could be. And none of us know what it could be or if it will ever get off the ground, but it could be a bridge for Bitcoin, where Bitcoin actually would take a substantial role in that currency basket, along with gold, maybe oil, and a couple of other things that would be acceptable to all players. And it's a new wrinkle in the potential solutions to this world debt problem that I just need to spend a lot more time thinking about. But in any case, that was a great overview. I hope it wasn't too much for everybody in terms of the scope. We went all the way back to the 1970s in sugar, and we've gone way out into the future in terms of what's possible. But the important thing to me is what we are seeing with these altcoins versus Bitcoin. And I think it's very important what Peter Schiff said, because I think that's commonly believed. And I think it's very important what Socrates concluded, along with what I concluded, that Bitcoin can take over the dominance in an up or a down market. And it looks like that's exactly what it's beginning to do. And somewhere in here in the middle, between 14,000 and 1,000, somewhere in this 6,000 to 8,500 zone is a midpoint at which Bitcoin is going to show all of its cards. And we will be there watching, and we will be measuring and bringing our too much. Socrates, any last words?
Yeah, just enjoyed looking at some charts with you today. As always, I was going to say that I was keeping an eye on the live viewers, and we almost cracked 1,000 for the first time. So I do want to thank everybody who has been coming in and watching on a daily basis, and potentially telling friends or family to come on and give us a listen. And definitely will appreciate that and moving forward, and hopefully we'll be able to maybe cross that threshold tomorrow. And with that being said, I am excited to go ahead and sign off and get my head back into some of these charts.
That sounds really good. We will be coming up with a schedule very shortly in terms of the subject of each of our things going on, but we will have a schedule where every day you will be able to count on what we will be discussing. And just one last heads up, with all of this activity in the stock market, the gold market, the crypto market, and therefore markets around the world, there can be no better set of tools than the ones that Socrates and I use that fall under this heading of consensio, which has to do with 1, 2, or 3 moving averages over various time periods, being able to call trend changes very, very accurately. We have taught it before, but a week from Friday, we're going to teach a 3-hour seminar, intermediate and advanced. And the description of what will be covered will be posted shortly at lucidinvestmentstrategies.com on our website under webinars. You can sign up already for it. A number of people are signing up already for it. I think this is going to be one of the most important ones we've done. Easy to understand. It's a very easy technique, but there's all kinds of implications about how you marry it to all of these other technical tools that Socrates and I talk about, and give preference to certain ones under certain conditions. So with that, thank you very much, Socrates. Thank you, everybody. Thank you for your support. And we will be talking to you tomorrow.
Sounds good. See you tomorrow.